Give us an update on China. You will travel there in the coming days. China's not in a vacuum. If they're not alone, where is China right now?
Well, China's struggling with the American, tariffs. They're trying to find a way through this. The United States, I think, by general agreement, has the capacity to hurt them in the short run. There's some risk that they'll take measures to counter the blow to the economy, which are unwise in the long run. Something similar to the response to the credit. But China's longer-term goal is to become a technologically sophisticated, powerful country. They will not be deterred from that. And their other goal is to become internationally influential, particularly in the developing world.
You are one of our links to the economic past with your study at Oxford a zillion years ago with the legendary John Hicks. Fine. We have a nostalgia about China. It's a link back to Orville Schell, a link back to Jonathan Spence in our imagery of the 20th century. Are we too nostalgic about China?
Well, I think, yes, in a way. I mean, China is evolving so quickly that it's a little hard to kind of keep up with it. And so, in a sense, I think the perception probably lags the reality.
Professor, and then I know Chris wants to get in, but Professor, first of all, do we understand China fully? Will they ever, for example, challenge the U.S. dollar as the reserve currency of the world?
Well, I think on that one, Francine, the chances of that happening, and at least in my lifetime, are very, very low. This is not a system that's set up to provide a reserve currency. I mean, I think they will be the biggest economy in the world and very powerful long before they become a reserve currency.
And I point out Barry Eichengreen and Joseph Nye are heated that will not happen.
Yeah, but you have noise from China saying that that's noise out there. But Chris also has a question for you, Professor.
If we go back and we look to 2015, the last episode of pronounced Chinese weakness, there was a lot of capital flight. You saw it with FX reserves, a big decline. That seems to be a little bit different this time around. FX reserves have been stable. If anything, capital has maybe been called home. Is that a signal here that the Chinese weakness is less serious this time around than 2014, 2015, 2016?
I think so, but the main reason for it is that the government is sufficiently in control of both the capital markets and the private sector that they can control this, and they've imposed capital control. So I don't necessarily think that the incentive for capital flight is gone. It's just that the opportunity has been reduced substantially, is what I would say, Chris.
What if the stock markets keep on falling in China? So I caught up with the former PBOC governor in Chernobyl about 3 weeks ago, and I asked him about trade wars, and he was saying actually he was worried that it would have an impact on how confident people are feeling, and that would ultimately also filter through the real economy in China.
Yeah, I saw that interview. Yeah, Zhou Xiaochuan is a very shrewd and experienced observer, and I think he's right. I think the psychological impact could easily be bigger than the kind of real economy impact of these things. To be honest, while the stock market is becoming more important, it is still true in China that the housing market is the dominant, asset for households.
Absolutely.
And so a housing crash would do way more damage than a crash in the Shanghai Composite Index.